All right, we have a real treat set up for you. This next segment, we're going to hear from Ryan Kimler, operating by your numbers, and Jim Hoover, um, partner at Hoover Kropelka, about law firm success. So Ryan Kimler helps law firm owners establish a really clear path to a growing and more profitable law firm. He's the founder of Net Profit CFO, and he helps his clients really see what's holding their business back from making more money and having more cash flow and more income. So attorneys seek Ryan out for his financial guidance and strategy. They work with him to build an action plan for the next month, all the way out to the next 5 years. As a business owner, which is one of the hats you wear, there are literally thousands of things that you could be doing every day. Some of those things you have to be doing, and working with Ryan will help you go from like decision fatigue to getting clarity and focus. And he's someone who I routinely refer to my clients. Ryan, welcome to the Law Firm Growth Conference.
Thank you very much. Happy to be here. And thank you for that introduction as well. I'm excited for today's presentation and I'm ready to get started with it. So let me share my screen. I hope you all are doing well. Day 3 of conference. And I am going to throw out a warning right at the beginning. There is going to be a little bit of math in this session. Okay, I know most attorneys are, not big fans of math. It's just going to be a little bit, but that's part of what's required to really operate by your numbers and have a growing and more profitable business. All right. So first, I'm going to start real quick, just a little bit about me. As Lay mentioned, my background is in accounting and finance, and I also run the Net Profit CFO. So I'm an accountant and I'm a business owner. I use my background to help law firms have a growing and more profitable business. And I'm successful at helping them from the finance side of things because I understand both sides. I understand, the accounting side of things, and I also understand the business ownership side. A little bit more about my background. I really use accounting to pick out the areas that's holding you back from more profit and more cash flow. More importantly, I know how to fix those areas. I know what levers to pull in order to, change the driver or change the number that is really driving your results. And so this allows me to help businesses grow and be more profitable. So with that, my firm, we're really on a mission, right, to help firms grow and be more profitable. I'm going to talk about next, as you all know, probably a few stats that you've heard. Most businesses fail. I think I'll get into some of the stats, but there are a lot of businesses out there still failing. So we're going to talk about who should be on your financial team in order to prevent failure. And then one of the last things we're going to do is we're going to go through an exercise. I believe you all have handouts, and that's where a little bit of math is going to come in. And we're going to talk about how to get control of your business, of your time, of your money, how to know that you're working on the right things to really help your business grow. All right. So first, why most businesses fail. The fact of the matter is most businesses fail 50% by the 5th year. So 1 in 2, this is according to the U.S. Bureau of Labor Statistics. In my opinion, that's a lot, right? 1 out of every 2 businesses is a lot of businesses to fail. And they're gone before they hit their 5th birthday. All the time, energy, money that the owner invested to try to grow the business, gone, right? The business is closed, shut down. Hopes and dreams that the owner had, also gone, right? I'm sure that they, just like most of you, probably got into business, you could run your firm your own way, make the money that you want to make, have time freedom, right? All of those hopes and dreams of those owners are gone. A lot of times owners are left with debt, especially if they guarantee things personally. I know when you get your business started, a lot of times in order to get credit cards, you have to put your own personal credit on it. And so if you close your business, file bankruptcy or whatever, that does not exempt you from having that debt personally if you've got your name on personal credit cards. And a lot of business owners end up going back and getting a job at that point, and they're stuck with the debt. So what's the reason why most businesses fail? They lack money, obviously, right? Every failed business would be in business today if they had access to money. That could be through loans, that could be through profits or operating their business. But either way, if they had access to money, they wouldn't have went out of business, right? They would have been able to pay their bills, make payroll, and they would still be in business. So who should be on my team? So we know that all businesses fail because they lacked money, but why do they end up lacking money? So in my opinion, I believe it's because they don't have the right financial team around them to support them and help them, really make some of the bigger business decisions, and keep them from going out of business. And so I think who's on your team is really, really important. And we're going to dive into that next. So there's this is on your handout. Definitely fill this in. There are four, in my opinion, as you're a small law firm and as you're growing, there's four really important positions that you want to fill at your firm. Number one that I've got up here is a bookkeeper. So I'm going to talk about what they do here briefly. They are really in charge of categorizing all of the transactions that happen in your business. So when clients pay you, when you pay bills, if you take on debt, they're in charge of categorizing that, breaking out the principal and interest when you make payments. If you pay yourself, pay distributions, the bookkeeper's in charge of classifying that. When they get done with their job at the end of the month, they should be able to produce financial statements from the work that they've done. So typically, the big financial statements that we're looking at are the profit and loss, and the balance sheet. Profit and loss is also known as an income statement. Those are the same things. But those are the two big financial reports that most of the time bookkeepers produce. So again, on your handouts, definitely write down position number one as a bookkeeper. And then over on the right-hand side, I've got a section for you to write down who's on your team. So go ahead and write down like, who is your bookkeeper? Maybe maybe you have an in-house person, one of your office staff that's currently doing your bookkeeping. Write down their name. Maybe it is an outsourced firm that you're working with. Write down that firm's name. If you're not working with someone yet, you probably want to put a star next to that number one that's on who's on your team. This is really the most foundational piece to have in your firm. And if your law firm, unless you're like really, really just getting started, if you're really beyond six figures a year in revenue, you really should be able to afford the bookkeeping piece. And I would highly, highly recommend, starting that search to find somebody to work with. The reality is it's probably just not worth your time. There's as Alay mentioned kind of in the beginning in my intro, there's so many things that you could be working on. There's so many places where you can put your time. And bookkeeping is just not a good use of your time as the owner. It's okay to start if you're brand new. But once you really get established, like I said, six figures in revenue, you should really be looking for a bookkeeper to work with. Again, a lot of firms today operate from a remote capacity. And so, that keeps overhead low for these bookkeeping firms. And it also gives you access to folks nationwide that specialize in working with law firms. And so typically you can work with them at a very, very reasonable price. And again, it's probably just not worth your time to do it yourself. Position number two is a tax preparer. So this person, whoever you're working with here, they don't necessarily have to be a CPA or an EA. They just need that accounting background and that experience working and filing taxes. You want to, obviously this person's going to help you stay in compliant with the IRS, make sure that you're making tax payments on time and that's on the up and up. And I think that that's really important for all business owners, not just you as law firm owners. But that's really the second position that you should have to work with in your business. I would highly, highly recommend talk with 3 or 4 tax preparers before you make a decision on who you work with. one of the things for all of us is it's really hard to tell, if an expert really knows what they're talking about, right? It's hard to tell when you go in and visit like your doctor or your dentist, like, are they good? Are they not good? Like if we compared them to five of their peers, where would they rank? Like we don't really know, right? We're not experts in those areas. The same is true with tax preparers. Just because someone has their CPA doesn't mean that they're great at what they do. Unfortunately, I've ran into CPAs that, have their own firm and are filing taxes, and I've found mistakes, right? And some that haven't done a good job. So, really sit down, interview three or four, ask them a few questions about your specific situation, what they know, and with law firms specifically. And then definitely, take notes and carry that knowledge with you from meeting to meeting, and then really kind of judge them against each other, right? Who do you feel like had the best answers to your questions? Um, who really presented new information that you didn't know before? Those are all good things to think about as you look for a tax preparer. Third position on your team is a part-time CFO. And again, as we go through this, write down the positions, and then also on the right-hand side, write down who's on your team. So the part-time CFO, they're going to take the work that the bookkeeper does. The bookkeeper produced the financial statements of an income statement and a balance sheet. And the CFO is really going to dive into what are the strengths of the business, what are the weaknesses of the business, and what needs to be worked on, what needs to be corrected, what can we change to improve the profit and cash flow of the business. So our job is a lot of analysis. That's really what we do at our firm, and looking at where the business can get more efficient. If you don't have a part-time CFO on your team, then you're really responsible for holding, that hat for yourself, as the business owner. And that's really true with any of these positions, right? That you don't have hired. It's, if you don't have someone on your team, it's up to you. All right. Working with a part-time CFO, you do have to, get to a place where you've grown probably beyond yourself. And you want to be a little bit bigger of a business, probably, maybe 400,000, 500,000 in revenue, growing maybe a little bit larger, just so that you can afford the expertise of a CFO. Obviously, full-time CFOs are, really, really expensive, probably $200,000 to $250,000 a year on salary. And so hiring one part-time, you're also going to invest a little bit as well. But it really is an investment. You should be getting a return in profits and in cash flow on what you're investing with your part-time CFO. All right. Last position that's really important for you as an owner is a retirement advisor. So I use the term advisor, kind of loosely, right? It does not have to be a financial planner necessarily. I think what's really important is you want someone that you trust, that you can work with, that isn't just, you don't feel like they're just pushing you to one product, right? From my experience, if you're working with a retirement advisor and they're pushing you to just one product, that's probably what they do with everybody. And that doesn't guarantee that that's the best fit for you. And so it's really important that it's someone that you're comfortable with, that you can work with, that's really going to set you up for retirement on your terms for when you want to retire. Unfortunately, I think there's a lot of business owners out there that, are really banking on their business, right? They think that when it comes time to retire, they're going to sell the business to, maybe one or multiple partners, and that's going to give them this large sum of money, and they're going to exit the business, and that's going to be their retirement. And unfortunately, I think a lot of times that plan doesn't end up working out. And so I'm always stressing to business owners, start working on your retirement. It's important to pay yourself, and it's important to focus on your retirement. As the business owner, you're not an employee, and so you don't have, like a plan that someone else is telling you to put money into. So It's something that you really have to work on your own and go figure out. So that really wraps up who should be on your team. Again, really look at that top section. Write these 4 positions in, and then list who's on your team. And then, really be thinking about 2025 and who you really feel you need to add to your team. Again, if you don't have someone on your team, if you don't have an expert on your team, it's going to be up to you to, do the job of what that person would do. Right. So I just went through all of this information. This is really kind of the summary of it. Again, if you guys, review all the speakers from day 3, you'll get this summary in the slides. Again, I just wanted to highlight here's the key points, right? So, again, the bookkeeper creates financial statements. The tax preparer reviews the financial statements and helps you pay and file taxes. The CFO does the financial analysis to really find strengths and weaknesses and then propose corrective actions to fix the weaknesses. And then your retirement advisor is going to help you retire on your terms. So that's really the summary there. Again, the 4 parts of your team. Again, I really would encourage everybody that's attending here live and watching this replay, really look at the team that you have, figure out who you need to add in 2025. All right, so how do I get back control of my business? So next, I'm going to go through the 6-step process that we use at my firm to help grow law firms and make them more profitable. So the first step in that 6-step process is to set targets. And I'm actually going to go in depth on this step here with you all. And this is on the handout sheet as well. So in the second part, like it says 2024 numbers, there's an R. That stands for revenue. So that is the amount of revenue. Write down, put in what your 2024 revenue number is going to be. So this is all of the sales that you do at your firm and that you end up collecting at your firm. That's really, really important distinction. There's a big difference between what you bill and what you actually collect, and you're filing taxes, and we're looking at these numbers based on what you actually collect. So again, on the left side for 2024, put down what your revenue number is going to be for this year. And then on the right side, put down what your target is for next year, for 2025. Put down what your revenue is going to be next year. All right. The next item is direct cost. That's what the C is for. C is for cost. The only really big item that's in direct cost for law firms are really 2 things. Number one, if you're working with outside co-counsel, I've always put that in direct cost. That is a direct cost to a specific case. And so that should be in your direct costs section. And then also contract labor. So if you've got, paralegals, maybe they're at an outsourced like staffing agency, or maybe you do have contract attorneys that you're working with that do work for you. They're not really co-counsel. Those would go in direct costs as well. So those are really the 2 big things that should go in your C number, your direct cost number. If you aren't working with either of those, you can put in a 0. And then, again, if you are working with one of those, put down what your total direct cost is going to be for this year, the number that you think it's going to be. And then also, what is it going to be next year? What is your 2025 target for that number? Maybe you're getting ready to hire an attorney in-house and you want to cut back on the contract attorney labor that you're using. And so maybe your direct cost number, maybe you're targeting a lower number for next year. That's possible. Or, you could go the other way too. Maybe you're taking on more cases and you want to leverage that contractor even more. And so you're going to have a higher number for next year. Either way, put down what your target number is for direct costs for 2025. That'll be on the right-hand section.
Ryan, just a quick question here on behalf of the audience. If
Yeah,
they haven't showed up with their reports ready to go, because I don't think I asked them to,
sure.
what should they be putting in for these?
Yeah, put in a really good guess, right? Um, I mean, ballpark numbers, at least to start out with, are a great start. And then you can go back and fine tune later. Um, but yeah, put in your best guess. Does that answer the question, Elaine?
It sure does. Thanks.
Cool. All right. Next on the list is a P, that is for payroll. So this is everyone that you have in-house, right? So, if you've got someone like an office admin, right, that's maybe answering phones, things like that. If you've got other lawyers, other paralegals that are, on salary or paid hourly, that goes in this payroll section. And also, what you pay yourself on payroll should go in this payroll section as well. If you're not paying yourself on payroll, that is definitely a change you should make for 2025. I like to see all of the law firm owners that I work with on payroll, so that they have a consistent paycheck and they have consistency in their life. So put down what your total payroll costs are going to be for 2024. If you don't know what the total number is, but like, hey, we run payroll every 2 weeks, and every 2 weeks it's $10,000, out of my bank account. You could take that $10,000 times 26 if you're running payroll every 2 weeks, or if it's twice a month, you could take that number times 24, and then also work on what is that number going to be for 2025? What is your target number again? Really factor in, are you hiring next year? Is that payroll number going to go up? Again, we're really working with ballpark numbers here, but put a target figure down. Where is the business going? What does that number look like next year? After that, there is an M, that's for all of your marketing. So that would include like Google search words, right? If you're doing like direct, pay per click advertising, I would put that in marketing. Sponsorships, I would put in marketing. Things that you're doing for your brand, I would put in marketing. What are you going to spend on marketing your firm this year? Again, that number goes on the left-hand side, 2024. And then also, what do you want to spend next year, 2025? That's really kind of your marketing budget number. All right, so put both of those numbers in. And then after that, we have the rest of your operating costs. Now, this one might be a little bit harder to come up with because I'm sure that there's a lot that goes into this. But this is going to be things like rent, your malpractice insurance, right? Softwares, computer, internet, any travel costs if you're traveling somewhere, continuing education costs. That's all going to go in your operating costs. And again, if you don't have a good, kind of feel for that number, you can definitely update later. But that's what the O stands for, is operating costs. And one of the easiest ways to get down to that number, if you do have an income statement or profit and loss handy, there should be a row that says total expenses. If you take out your payroll and marketing numbers from those total expenses, your operating costs are what will be left. Lastly, you have net income or net profits. Both those words are interchangeable. This is really what the business is going to make from an operational standpoint. So your net income is basically your revenue minus all of your costs. So that would be direct costs, payroll, marketing, overhead, as I put in parentheses there. That's going to bring you down to your net income and what you're going to make as a business. Hopefully, for everybody in the room, that number is positive. It is possible for that number to be negative. It means you would have a net loss on the year, meaning you lost money from the operations of your business. That is, not a good thing to do consistently. You definitely want that number to be positive and hopefully growing. All right. Last item that I've got there is TOP, total owner's pay. This is probably one of the most important ones in my opinion. So your total owner's pay, you're going to take your net income number and you're going to add in what you pay yourself on payroll. So if your net income from the business was $100,000 and you pay yourself $50,000, your potential total owner's pay is $150,000. If you are servicing debt in your business, you're not going to be able to take home that total owner's pay number. Those debt payments are going to have to come out of that total owner's pay. So this is just the number that's a potential for you to earn, not necessarily the guaranteed number that you are earning. But that number is really important. Again, make sure that you're putting, the number that's going to be for 2024 on the left, and then for 2025, look at what that target number is. If you've gone through this whole process and you've listed your target numbers for revenue, direct costs, payroll, marketing, and operating, and you get down to net income and total owner's pay, and you're like, I'm not happy with those numbers, then one of the inputs has to change. Either revenue has to change or your cost, payroll, marketing, overhead has to change. If you're not happy with your net income and total owner's pay numbers when you get down to the end. But definitely be looking at that for 2025. Be working on planning and putting that together. And this is really the first step of annual planning that I start with a lot of firms that we work with. And this is what a lot of business owners and law firm owners don't do, right? I think you start thinking about goals for next year and everybody focuses on revenue, and we don't get all the way down to talking about what is net income going to be, what's my owner's take-home pay going to be. And so I think this exercise is really, really important. So that's really step one. Then in step two of our process, each month you should be looking at your financial statements and looking at your business and figuring out how well you're performing. If you have a revenue goal, I'm just going to make it easy, of $1.2 million next year, everybody, that would be $100,000 a month. But you look at your January numbers and you only did $40,000 in revenue. That's a problem, right? And you're not performing well to hit that 1.2. So every month you should take the reports that your bookkeeper produces, and you should be looking at what you've done in the past and where your business has been.
Ryan,
After
I just
that,
wanted to jump in and let you know we've got 2 minutes left.
okay, I'll try to speed it up a little. After that, you really want to look at where you're going, right? Forecast forward. And so, there again, like if you're $50,000 a month in revenue, you can multiply that out times the remaining, 11 months and see where you're going to be. And then that way, that's going to help you take steps to move in the right direction in the future. Each month, summarize what you're looking at on the scoreboard. Is your revenue on track? Is your marketing expenses on track? Overhead, right? Look at all of those numbers and give yourself a score. Maybe it's a 1 to 3. Maybe you can do, green, yellow, red, right? But each month, that way you know what's on track and what's not. Here's an quick example of a scoreboard that I built out for one of my clients. It's very, you don't have to have something this complex, but it's very easy to see what metrics we're on track for and what ones we aren't, right? The ones that we aren't obviously are in red. And then after you've looked at your scoreboard, it's time to create a plan. So look at the metrics that are in red, or maybe you rated them a 1, right? They're not doing well. You need to create a plan to start, moving in the right direction and changing your numbers. And the last step is to execute your plan. That's the only thing that there is left to do. And then from there, just repeat the process on a monthly basis, looking at your numbers, creating a plan, and executing the plan to improve your numbers. I know I ran through the last part fast. I would highly recommend downloading the slides and really going through that part. And if you've got questions, of course, you can reach out to me, reach out to Alay. I'm sure we can both help you through this process and help you improve.
Awesome. Thank you, Ryan. And the reason why financial stuff is in the part about the day for less stress, not more stress. It may seem counterintuitive, but having a handle on your business, especially knowing how much money you're making, how much money you're going to be making, that just brings the stress level way down. And when you get financial control, not Ryan's nodding, like, that just spells relaxation and calm. And if you haven't been in that state before, you totally owe it to yourself to get there. So thank you, Ryan. Really appreciate your talk today. And it's always educational. I love the dashboard that you put together. Thank you.
Absolutely. Thank you for having me. It's great to do it.